Hello, and welcome back to the Future of CRE Sustainability. I'm your host, Sean Swentek. Today, I'm joined by Tom Stanchak, Managing Director of Sustainability at Stoneweg US. Tom, thank you so much for joining me today.
Sean, I really appreciate the invitation. I'm very happy to be here.
Tom, you've helped transform I think, $2 billion plus portfolio, their entire sustainability approach. What is the one mindset shift that changed everything for your organization?
I built the approach, so I didn't shift it. I built it because we really didn't have a sustainability approach when the company was founded in 2016. I came on as one of the first employees, so I started as an asset manager. And I really think that moving into the sustainability role, coming from asset management, equipped me with understanding where all kind of like the levers and points are to focus on for action. But, there's kind of like two levels to making that transformation. One is in the first 2 years, I really focused on education. So in parallel, I was building the whole benchmarking solution. But every week I made short videos, 2 or 3 minutes long on kind of like these bite-sized subjects, and I would push them out across the organization. And, they're animated, they were quick. I try to bring, some humor and some joy into it. So people it's kind of like building a zine. People got engaged on that. I then started to include people as features in them as well. So then everybody from the organization got like a round of being featured in a video and how they are playing a part in it. So getting people involved in some level, you need to make it accessible to people. So education is a big part. And then also in the parallel, you've got to do the work to understand our portfolio and what actually needs to be done.
By and large, every successful sustainability director I talk to brings up stakeholder education and engagement as the key to making these programs work in the long term. So I'd love to hear that. Stoneweg operates internationally as well as in the US. Can you talk just a little bit about, because you manage the US sustainability side of it, how is the business different in the US versus internationally?
I think that, so I collaborate at a group level on sustainability. So I get to interact with my peers and across the other verticals and across the pond regularly. And I see what they're doing. And there's some things, of course, where I feel like we really stand out, particularly because we have our asset type right now is 100% multifamily. So it's a little bit more homogeneous in that sense that my approach to it, where there's a lot more variety in the verticals in Europe. But, they, in the last few years, they have done some really remarkable things. Particularly, we were summing up for the group sustainability report we do on an annual basis. They were summing up solar capacity. And I felt a lot of desire to become competitive. Let me put it that way, because they really have done some remarkable expansion in terms of solar, particularly in Europe over the last couple of years. And I think we've all seen that in the headlines too.
Yeah, the EU has been a leader for some time now on the solar front. It's great to see. Coming back to the US, when you're dealing with property owners, investors, operators, what is the biggest misconception folks have when it comes to implementing sustainability initiatives?
I think it's a function a bit of how the sustainability profession has evolved. And it evolved sort of out of the corporate responsibility realm. And there's a lot of value signaling there. And you start to muddy things up when you're saying that we should do this because it's the right thing to do. And that's not sufficient evidence in the private sector to inform investment committee or capital committee or make a long-term strategy. I take pride in a lot of the things that I get to be involved in are, positive for people, positive for the planet, that sort of thing. So like, that's something that motivates me. But ultimately, I point to, really the economics and the dynamics of energy and climate change and the impact and the transition, and kind of point to the arc of where the economy is heading on this, and saying, this is sufficient evidence that these things are good for your business. And it's a bonus that you can actually shed a lot of light on them and actually bring them out and kind of put them center stage, because people feel a lot of personal pride in it. But ultimately, I focus on the economics and thinking about how to align a portfolio to capture those incentives and the opportunities, avoid risks over sort of my mind, it's a function of the job, but I'm always thinking 5 and 10 years ahead.
You mentioned incentives. Even without incentives, a lot of the folks I'm talking to, utility rates don't tend to go down year over year, whether that's energy, water, whatever it might be. Financial return on a lot of these sustainability initiatives is pretty real across the board, is what I'm hearing.
Well, actually, it's much more real than a lot of things traditionally in real estate that we've invested in and we assume a return on. It's sort of twofold. Yes, you are going to consume energy, electricity, for example. And if you install solar, depending upon where you're at and what rate structure, there's a pretty significant spread between 10 cents a kilowatt hour and 20 plus. But at the end of the day, you are avoiding those expenses. So at least there's a return regardless of how quick the return is. The other thing is that we've not yet experienced what we all know is coming, which is a huge increase in demand.
Yep.
And what impact that's going to have on the economics of the cost of energy. And I think that fundamentally, it's going to drive inflation of energy expenses really outside what we've all become comfortable with, is underwriting these 2 and 3% annual year-over-year increases. I think that that's a thing of the past. That's kind of where everything is pointed. My personal opinion and how I interpret the economics of it. The other thing is the cost of all these technologies. Unlike, fossil fuels have made us all wealthier, healthier, given us all so many benefits, but we're at a point now where that technology is getting more and more expensive to innovate. You get less and less efficiency out of it. And the maintenance, because it's mechanical in the sense of a lot of moving parts, the maintenance in terms of labor and all this, and the inputs are volatile, where you look at solar and the price performance of the technology continues to improve. Batteries are the same and other types of renewables are the same. The other aspect of it is there's no cost to the input. So you don't have the volatility to deal with. So this is kind of like how I'm trying to do the work and really focus on results and speak the language of capital and investors in order to make them comfortable with, there's a lot of thought and rigor behind our approach. It's not, we're just in a hurry to get things done at any cost. It's really, the cost to me is if you really mess things up, the cost is not being able to do it in the future.
Well said. You've achieved pretty remarkable results specific to workforce housing sustainability. What makes that asset class uniquely positioned for environmental impact?
There are a lot of them. That's number one. I mean, there are a lot of renters in the US and it's a growing segment of households. And there's a number of reasons for that. The other thing is I have, at least for now, I have the benefit of largely investors, no matter what their background or how they got into their role in decision making, people understand apartments. They understand multifamily because almost everybody's had the experience of living in an apartment, no matter where you come from. It's at some point in your life, it's in a studio in a major city somewhere after you get out of school or, something else. So I think that also I point to, when you think about all the different asset classes, and I know it sounds a bit strange, but I'll say that, the proof is the technology that kind of pushes, and the use case that pushes office, that pushes industrial, that pushes other types of real estate asset classes. Things can change. You look at COVID and other sorts of dynamics, things can change that impact the value of those asset classes and the supply and demand tremendously. What I can say is that the technology and the use case for living in a house or an apartment is not going to change anytime soon. I feel pretty confident in telling people that. So the base case is pretty solid. It's also, the big impact opportunity is, I think I try to, when we build these projects and build the scope and think about how we're going to make these changes, I really try to put myself in a very empathetic position with the people that live in that community. And ultimately, I believe that they want the same thing I want, which is to go home, to feel good, to feel safe, to, feel like there's some convenience and comfort there. And I think that there's an opportunity to really interact with people in probably the most intimate environment you can and demonstrate that sustainability is really a value add.
I appreciate you sharing that perspective. I don't think every multifamily investor in the world thinks that same way. So that's commendable. You've set pretty ambitious goals at Stoneweg, like 50% emission reduction in 10 years. How do you make those targets really achievable?
I don't know if you're familiar with the White Stripes song, Little Acorns.
I think I have heard that one.
This is what gets me through the day when I'm thinking about a goal, driving towards a goal over a decade, is that, it's like eating an elephant. It's one bite at a time.
Mm-hmm.
I think fundamentally what it requires is sustained focus on these issues, on areas of opportunity. So it's not everything everywhere all at once. And like I said, kind of like just throwing a lot of things at it and hoping for a good outcome. But it's a rigorous approach. So you really need to start from a data-driven kind of foundation.
Mm-hmm.
And data-driven is a big buzzword, for decades. But you can measure energy. You can measure the cost of energy. Like it's not voodoo. It's very straightforward. And you can understand then on an asset level, in our case, down to the building level, where those opportunities are. So it's not easy, but it's really what it is just focused, and it requires a focus on the details over time and really not getting distracted by a lot of shiny objects that maybe feel good to latch onto, but really aren't going to have the impact.
What role does the resident engagement play in a property's sustainability success?
So, when I think about, we talk about ROI a lot. And I really think that it's this concept of when you go and lease an apartment and, ultimately it comes down to price for people. No matter what their income, they have kind of like an expectation and comfort level of what they're willing to pay for a home. I like to think about that also sort of in a similar way of what value do they think that they're getting in exchange for that price? So am I delivering good value? Do they feel like on some sense, things are equitable, meaning that, yes, I've paid my rent. It's difficult for me to pay my bills, but I do it. And actually, I feel like I get a decent exchange in value. I feel like I have a nice place to live. Fundamentally, that is success for me. So it kind of comes back to when we're doing projects and retrofits to improve building performance. I actually test out personally a lot of the things that we're installing. If I can't do that, I'll look for people that live in individual locations on site where I can do product installations. Like one project we did in Dallas, the property manager lived on site. I had everything installed in her place first and let her live with it for a month and tell me what she thought.
Wow.
Because ultimately, it's not, you can do things at scale rapidly and cheaply. But I think that the reality is that approach is very short-lived. Any impact is ephemeral. And what we really need to focus on is making improvements, whether they're perceived as sustainable. I would actually like it to be perceived more as an improvement in the standard of living. So I think that you can't have this approach to, I want to save water, so I'm going to constrict it at all costs so everyone's miserable. Like this is not a path that leads to success.
Mm-hmm.
So I test out and I identify fixtures that are conservation fixtures, but actually have, they feel good in your hand, or, the flow feels right, that sort of thing. And people don't actually notice that they're saving water. Actually, they feel good about what they're doing and living their life. So I think that if I'm installing equipment, fixtures, appliances, mechanical systems anywhere, and it's not improved somebody's quality of life, I'm not doing my job. So I think that resident satisfaction plays an important role in the sense that I put out surveys and education about what we're doing. I ask for people's feedback. We use like Google Forms and stuff like that. When improvements are being made inside people's homes, we leave pamphlets with a QR code for them to say, what do you think about this? Did we do a good job?
Wow.
And then afterwards follow up as well. And we do also other sorts of continuous resident satisfaction surveys, and we look at these trends because I think ultimately these things are tightly interlinked. You can't do sustainability well and not manage people's expectations. You can't outcompete your competitors in a market and really not make sure that you're doing a good job with everything you do and not just sustainability.
Wow. Tom, you've worked across development, acquisition, and operations. When you think about integrating sustainability initiatives, how does it differ at those different stages of development?
So how I think about that is like if you're coming into a role like mine in a real estate investment organization and you're like, you know, if I could take my experience and sort of give it to someone else, I would first, look at your property list, your portfolio list, and figure out where you are in the life cycle of each investment. And that's a big kind of like, I think that's a litmus test of where you have an opportunity. So liquidity events and planning around liquidity events are the biggest opportunity to make sure that sustainability is part of your business plan. And get engaged on that with, acquisitions is at one, probably the biggest point and the most obvious. But before you're refinancing, understanding when your debt matures and getting ahead of that and getting with maybe capital markets that deals with debt and engage with them on, their incentives for green programs. And, we can do these things and sometimes you can like work it into the leverage and refinance and get some incentives as far as discounts on your interest rate, lowers your cost of capital. If you are moving into disposition, getting engaged with the broker, and I create a plain language like broker talking points on the green features. I work to push to make sure that those aspects are pushed into the OM, that they are translated properly into the underwriting. And, because the thing is that if you install a solar array today and you bring it to market, a month from now, the impact of that is not going to really be fully baked into the financials that they're basing the underwriting for 15 months. This is just the way our business works. So, making sure that impact is fully realized and noted in the broker's underwriting and OM and their advice and their engagement to potential buyers. If you've completed building, certifications, BREEAM, LEED, Green Globes, Fitwell, that sort of thing, making sure that the broker realizes, hey, I've done this in the last couple of years. You could actually get, a green loan incentive as a result of what I've done. And basically it just makes the buyer's job easier. Well, anything that improves liquidity is good for me as well as a seller. So it's this sort of stuff. It's pretty practical, but you need to kind of understand the cadence and kind of the rhythm of the life cycle of real estate investment and really make sure that you're getting to the table with the right tools. And I write everything down in a one pager and I try to write at a fifth grade level. This is not because I think that everybody reads at a fifth grade level. It's because I don't think they read what I do, my profession, at a professional level. That's just the reality of things. They're not going to understand aspects of building environmental management mechanics and things like that. And nor should they. If you're doing your job, someone in my world doing their job, you should be able to explain it to them in a way they can understand.
You mentioned Europe earlier, the EU, Australia. Some of these places have been leaders in solar energy for a long time. The US has been having a moment now for 10, 15 years around solar. We're starting to see some potential headwinds pop up. When all the dust settles, where do you think the US is going to end up around commercial solar? And what do you look at as like the outlook for that market?
I think the long arc, right now there's a lot of, uncertainty with policy, how the tax credits are going to be treated, not just for solar, but for a lot of, building efficiency. And I think the thing is, if you kind of look ahead, maybe to like where your underwriting is ending for a property you're acquiring today, the technology in terms of like solar is transforming and it will continue to get cheaper. There'll also be innovation, like, right now, largely solar is dependent on a silicon substrate. And there are other sorts of innovations that will be coming to market soon, commercialized soon, that will improve the performance. And so I guess I have some optimism that even if the tax credits go, the policy dynamics that are largely, in the hands of the states and utility commissions, the policy around this will continue to transform. And I think it'll be, because demand is increasing, I think that there's a big incentive for them to be much more, you're going to have more and more grid interactive buildings, meaning that buildings won't just be an end user, but They will be responsive. They could actually generate and share power. They could store power, that sort of thing. I think that's where the market is headed. And it's really like, it's a function of need. It's not a function of, I want to use solar because I want the lowest possible environmental impact for the energy I demand. But I just think that it's a necessity because of how the dynamics of the grid are set up and how where the economy is heading. There's going to be growth, and that growth is going to demand a transformation in how we use energy. I think that people should find a way in real estate to take advantage of that.
It sounds to me like solar is going to play an important part in the future of Stoneweg's plans in the US. Is that true?
I'd like to believe so. I doubt. So I do have a stake in that. But I think that what I've done the last couple of years is create a successful track record. I think that, that again is the foundation you need to point back to, not so much of projecting how something works, but really reminding people of, how you made it work and how it can be continued to made to work. And I think that this is something, it's a type of muscle memory and a type of talent that you really need to work at. It just doesn't come fully formed out of the box. It involves a lot of moving parts, and you can't just kind of like put it into an acquisition budget and then hope for the best, particularly around new technologies like this. Because I know solar has been around for a while, but it's new to people in terms of real estate and multifamily. It's doing lunch and learns and video calls with site staff and explaining to them the improvement that's being made, how it works. An anecdote that I shared before is that the first property we acquired with a solar array, it had a carport array. The seller and the site staff at the time insisted that it didn't work. It was broken. And I couldn't make it to the due diligence. There was, property is in the Midwest, but our CEO said to me, the solar array we brought is broken and we want to fix it. I'm like, all right, well, thanks for telling me. I flew out there and had a look at the property, and I followed the conduit from the carport into basically the garage. And inside the garage was 2 inverters. The inverters were lit up. There was a tag with a phone number on there. And I called and I, introduced myself, and a gentleman who was actually the designer of the system picked up the phone and he gave me a log on. The system works fine. I think that, I sort of make the joke, it doesn't require oil. It's not making a noise. It's not smoking. Mm-hmm. People assume there's something wrong with it, where it's like reliably, quietly, passively bringing you power every day. And so what I ended up doing, since it was installed, the tree canopy next to the carports had overgrown a bit. There is some pollen and that sort of thing so I had it cleaned. I had the trees trimmed and, boosted the power. And that was kind of it. I think that I don't want it to be taken to an extreme in the sense of like, you can just forget about solar. Mm-hmm. It's really important that you do annual maintenance. It usually only costs a few $100. Yep. Just to have it checked out, bolts tightened, bins wiped down, don't just completely sort of ignore your investment after you put it in. But it doesn't require this sort of like high touch maintenance that a lot of systems require. And I think that is part of the learning curve for people on site and people actually just in real estate that are buying real estate, is they don't have a lot of direct experience with solar yet. So we're all sort of learning together.
What's your outlook on some adjacent technologies that are a little more nascent, like battery storage and EV charging?
I think that battery storage is going to take a lot of forms that we don't quite all assume yet. So I think that there's probably an assumption that, battery storage has to be these like, big systems, if you want to do it at scale, that maybe like are sitting in your garages or in your parking lots, and they're kind of monolithic. Sort of like, the transformers that you see that are built next to buildings that people are they're mysterious on the inside. I think that there'll be some solutions like that, but I think that probably what will happen is they will start to be really incorporated into all the appliances inside buildings. And you'll start to have, I talked about grid interacted buildings, but you'll have grid interactive appliances everywhere that sort of your range is going to store power, your fridge is going to store power, your dishwasher is going to store power, your HVAC and your hot water tank, and they'll sort of all collaborate. I think that that is an aspect of, I don't want to go too far, but you could have DC buildings instead of AC buildings at that point. Like, you could change the architecture a bit, and I think that it would be much more efficient. But this is not the next 5 years. It's probably the next 15 years.
How has the regulatory landscape around ESG reporting sort of changed the game for multifamily operators?
I think that I'm somebody who has to take part in a lot of reporting. And I'll tell you that I don't enjoy it while I'm doing it. And also maybe part of the frustration is that it's very backward looking.
Yeah.
I'm completing our GRESB, the Global Real Estate Sustainability Benchmark, submission now, about to press send. And I'm providing them data from not from the last 2 years, from the beginning of 2023 to the end of 2024.
Yeah.
So the most recent information I'm providing them is 6 months old almost. And it feels a bit odd, but fundamentally I understand that, you're building the same sort of benchmarking that's important to you to make decisions, but you're shifting it with the benchmark. I get that, but it doesn't feel very satisfying. What I can say is that regulation is a floor. And if you're trying to kind of navigate investment in this area through meeting regulation as like a lowest common denominator, it sort of feels like very uninspired and not entrepreneurial. I think that really embracing the concepts and the principles, the economic principles of this and what it means, and just how better stewardship can lead to, a more profitable company, is the way that I would suggest approaching it. It makes compliance much easier when you're doing things right to begin with. So it's, what I can say is that if it comes down, regulation is not going to save us. And I know that some things are being deregulated now that people are upset with, but it really comes down to getting people to get engaged and know that there's something in it for them. And it's a cultural transformation. It's a different mindset. And it's the transition to a low carbon economy. I know that we have like steep and smooth creme lines to all look at and, know that we're going to make this miraculous and beautiful move to, an emissions free world. And really it's going to be filled with acrimony, fighting, disappointment from time to time, and a lot of successes and improved quality of life and improved health and wellness and all sorts of other things, the price volatility disappearing, and it's going to bring a different dynamic. But that being said, it's like everything else in life. It's a sort of, let's call it a couple of decades of giving birth. It's ugly and messy, but it's beautiful.
I love that. All right, Tom, let's move to some lightning round questions, your quick hits on a few high level topics. Solar, wind, geothermal, battery storage. What is going to be the fastest growing, where are we going to see the most growth in renewable energy for commercial real estate in the next 5 years?
Battery storage. I think that there's lots of headroom in the economics of this, and then also the grid responsiveness aspect of it.
Yep. What is a PropTech, property technology solution you've used that kind of exceeded your expectations?
We've done some sort of Internet of Things, automations around, they're centrally around space operations and conditioning and that sort of thing. And there are really neat, low cost, high impact, easy to use, and I think kind of fun solutions out there. The issue with it is the solutions are becoming so cheap and so small now, people don't even realize that they're in the room with them. But that's, I guess, a good part of technology is that it's just getting baked into everything.
Yep. What is the one ESG metric you check every day?
Every day.
Or most often?
Well, yeah. What I'll tell you is the metrics that I look at on a regular basis are Energy Star scores, water scores, because multifamily you can do a water score, and intensities. I look at that on a monthly basis, rolling looking at the trends and trying to understand, number one, how good my data is. Because if you start to see sort of abnormalities there, you probably can pick up an issue in your data lake. But the other thing is that you can start to understand once you get beyond a year of benchmarking, you can understand basically the respiration, the behavior of a property and where there's an opportunity. So I can start to pair that with inventories of building equipment, capital plans, and figure out what is going to be the best opportunity to make an impact financially and environmentally.
Complete this sentence. The biggest myth about green buildings is?
The biggest myth about green buildings is they're expensive. And the reason that I want to say the word expensive is that it should be valuable, not expensive. It's a different kind of mindset and nomenclature, and calling something expensive means that it's actually the price is exceeding its value. But I would say that the reality is that green buildings have a lot to offer. You just need to be thoughtful enough to figure out what those opportunities are. And it's part of my job to explain that to people, how to gain the advantages of green buildings, because I think that there's, it feels good to own them. There's a pride in ownership of high performance buildings and the aspects of that. But also, it's a better investment in terms of thinking about other dynamics that can, reduce your cash flow and impact your value over time. Less risky.
Last one. You're a billionaire real estate investor with unlimited capital. What's the first sustainability upgrade you make in your portfolio?
What I would say is that probably I would go with shadow metering. I would really want to put the sensors in place across at a granular level. If I was able to think over a multi-decade or from a development point of view from the ground up, which is probably the best position to be in terms of some of the solutions that can really make you very agile. Multifamily buildings, traditionally, it is rare to find a BMS system. And I think that, robust BMS systems can really get people actively managing their buildings and not managing it in the sense of getting shocked when you get a utility bill or start seeing pools in your parking lot, things like that, that once it's occurred, you've already had a casualty. I really like to take the approach of, understanding when risk is beginning to present itself and mitigating it and avoiding those issues. You think about in the Midwest, you have drops in temperatures and that sort of thing. You have freezing pipes and all this stuff that it can cause. A robust BMS system and a good site staff can give you a really sustainable building.
Tom, this was such a pleasure. If people want to learn more about you and the work you're doing at Stoneweg, where's the best place for them to go?
Follow me on LinkedIn. I try to be engaging there because, I think that I take the approach that you shouldn't keep success a secret. So I try to talk about, the things that we're doing and the good things that we're doing in a way that people can understand. So I'm doing a lot of shameless self-promotion, but I'm doing it for really, really, I'm using my powers for good.
Thank you again, Tom. Really a pleasure to have you on the show. To all my listeners, thank you for tuning in to another episode of The Future of CRE Sustainability. I'll see you next time.